Okay, so I'm going to be showing you how a few things work on TradingView. You can do most of these same tips and tricks on MT4, but I like to use TradingView because sometimes it'll give me extended vision as far as my indicators are concerned. And I'll show you exactly what I mean by that. But taking a look at GBPJPY here on the daily chart, you can obviously see we've been in a downtrend over the last few days, last couple weeks. Right up here, you can see where the price is hitting resistance, where these large wicks are on top of the candle. And down here on the bottom, you can see where the support is. So I'm going to show you how you can combine all of this along with the technical indicator rules to know where to enter the trade and what direction to trade it to. So first of all, here on the daily chart, I don't go any higher than here, but this is pretty much the overall outlook that you're going to use to judge the overall trend of the pair. And then you're going to work your way all the way down to see what's going on in the shorter time frames. So if the price is currently trending down like it is here on the daily, and it's also trending down on the H4, as you see lower lows being created in all of those red candles. Come down to the H1, price is trending down. The 30-minute price is trending down, but you see a little support hit and the parabolic dropping below the price. So what that tells me is if I go lower, I'm probably going to start to see some inconsistency, which just basically means the price is either ranging or there's a upswing, a buy swing interrupting the downtrend, which is really no big deal in the overall picture when you're talking about long-term trades. These kind of moves you won't really even pay attention to. But as a scalper, you're going to have the opportunity to benefit off of trades up and down, or at least going in the same direction multiple times, where another trader would just hold out to cash out at the end. I mean, there is no right or wrong way of doing it, long as you're in profit. But come all the way back up here to the daily. And what I want to show you guys is how to recognize areas that the price is going to react to. So in order to highlight areas of support and resistance, you can use basic horizontal lines. And what you want to do is find areas where the price is bouncing off of multiple times with long wicks, which basically means that a price movement was rejected, or the majority of the market started to back out of their positions. So it causes a reversal. So if I set up a horizontal line right here, I know this is an area of support because the price has responded to it multiple times, as well as right about here, where you can see the candlesticks back here on the left, and also over here in this area where you see more candlesticks, as well as this wick right here where the price bounced off close to the last candle. So if you work your way down the time chart now, you'll see candlesticks reacting to those same areas. You might just have to scroll back. But you can see here these areas of support and resistance are real. So once you start to recognize them, you know what to do once you get to those areas. So like right here, we're on the H1. You see this long red candle here that broke through that area of support, completed the candle below that line, which basically tells you that the price is going to continue to go down to this next red line. So if I were going to set up a trade or a pending order, I would be aiming for this red line as my target profit, which is a good 80 pips away. So that's pretty good money right there. And then also additional confirmations would be the fact that this cloud is red, meaning that the barrier B is over top of the barrier A, which is a sell signal. We got both parabolic SARs over top of the price, sell signal. Lag line is below the price, this green line back here, sell signal. And then the conversion line is below the baseline here, sell signal. So as soon as the market opens up on Sunday, definitely gonna be selling. And I could have held out, but like I was saying in the Telegram group, I don't like holding positions over the weekend, because once the market opens, not only have you accumulated a swap fee, but the spread is going to open up on you. So if your spread exceeds the stop loss, you might lose more money than you were calculating for. That makes sense. So we could draw more of these support and resistance lines, kind of create a pivot chart. But the other thing I wanted to show you was Fibonacci areas. I like to use the Fibonacci retracement tool. There are many Fibonacci tools one could use, and a lot of people use it different ways, but the ideal is you want to, where you place your first dot is going to be the 100 line on the Fibonacci. So if you're plotting a downtrend like I am here, you're going to start up here at the top and drag it down to the lowest point. And then once you have the 0 line on the lowest point, to make it easier to see, you can just stretch this all the way across the chart. And just make sure you leave that 0 line on the lowest candle. So Now, not only do I have my areas of support and resistance, but I have my Fibonacci areas marked off. So you can see where the price responds to these different areas of the Fibonacci, which are all highlighted by different colors. But once a new level is reached, it's either going to bounce off of that level or it's going to break through it, given price movement momentum. So each of these areas, you're going to see candles either stop there and turn around or break through there and really start to move. As you see here, like all the biggest candles you see right now on this chart are all reacting to areas of the Fibonacci. And when you start up here on the daily chart, this is going to make you a whole lot more pips. I'm not sure if Fibonacci is more effective. It's probably more effective on higher time frames, but I'm sure it works on lower time frames as well. So my synopsis or my hypothesis for the beginning of next week is you can definitely expect the price on GBPJPY to continue to fall. Why? Because we're in a downtrend. Everything is lined up for the sell structure. This area of support was broken, and this looks like a pretty strong candle. It closed below the support area, so that tells me the price is going to continue to go down. And the area I would be aiming for, instead of the 0 line on the Fibonacci, which it very well could go down to, would be this first area of support in between the 0 and the current price, which is 143.84, about 80 pips away, like I said. So if you're still in a sell, that would be your target profit right now, 143.84.